morning, everyone. My name is Jay Mann. I'm the owner of Amada Senior Care in Richmond, Virginia. Welcome to Java with Jay. I'm here with Garrett Hicks, owner of V.I.P mortgage in Richmond, Virginia, and probably a broader scope than that too. And we're going to get into that in here in just a few moments. In our business, I work with families in helping them select the best care options for their loved ones or for themselves, but oftentimes the questions come up, well, how do I pay for this? And in helping them with financial care coordination, one of the options that often comes up is pulling equity from a home to use that as a vehicle to help pay for care. I understand at V.I.P Mortgage, that's what your business is built on. Could you help us understand a little bit about how an equity conversion in the home works?
Yeah, absolutely. Doing this for about 10 years now. Love working with seniors.
Yeah.
We found most of the time seniors either do not have enough money to last the rest of their life, or B, would like to have additional funds to be able to do other things in life that they wouldn't be able to do without this financial vehicle. So sure. The home equity conversion mortgage is a product that we truly love. We've seen the benefits that it's having to our seniors. Ultimately, a home equity conversion mortgage is the exact same as a traditional mortgage. The only difference is you have to be 62 and up to qualify, and the tax-free cash that the seniors are able to pull out of their home, the payments are optional. They do not have to make those payments until after they either move away or both parties ultimately pass away.
Okay.
So they are protected to both parties to stay in the home without having to pay that back until both parties pass away.
Thank you. That's very interesting. And when I've brought up, because it can confuse me a little bit, and I'm in the industry, when I've brought up this topic with seniors in the past about a reverse mortgage, there tends to be confusion, and uncertainty, a little concern. How would you address something like that?
Absolutely. That's one of the common things we run into. The senior or the kids think that we take the home. That couldn't be further from the truth. Both parties still remain on title.
Okay.
There is a lien against the house, just like any mortgage. There is a lien against the house.
Sure.
Ultimately, again, as I mentioned, all this is a financial vehicle that allows seniors to be able to pull equity out of their home. It is tax-free. Mm-hmm. There's different ways to set it up. They don't need to take it all at once. Mm-hmm. And then ultimately, the only difference is the payments are optional. If they would like to make payments just like a traditional mortgage, they absolutely can do that.
Okay.
They could pay it all back at once. There's no prepayment penalty. They have complete control of how it gets paid back, whether it be now or when both parties pass away.
That's amazing. Yeah. And so how then is this different than a home equity loan?
Yeah, so the main differences between a reverse mortgage and a HELOC, a home equity line of credit, are the biggest is when you borrow from a HELOC, you now have to make payments.
I see.
Whereas with a reverse mortgage, you do not have to make payments at any point. You can, but you certainly do not have to.
Okay.
The second piece is a lot of people don't know that this piece of the program exists, but if the senior does not need to take money now, we can actually put that into a line of credit, which works just like a HELOC, but it grows at the same rate as the interest rate. And we all know interest rates have gone up. They're almost 7% right now. The senior's able to put that into an investment tool that grows at 7% guaranteed.
Oh my goodness.
And that's not part of the loan balance until ultimately they take it.
Oh, that's great.
So it's a great way to set up a rainy day fund for future care down the line.
It could possibly be an investment strategy.
Exactly.
Okay.
Exactly.
That's interesting. So now, can everyone do this?
I wish everybody could qualify.
Right.
Ultimately, at this point, you do have to be 62 or older. With interest rates where they're at, the minimum equity is about 50%. So if you've got 50% equity or more, there is an income check and there is a credit check. The income check is just to make sure the borrowers have enough to pay their taxes and insurance. That's the key piece. That's really the only way you can default on a reverse mortgage is either not living in the property and not telling the lender, or not paying your property taxes. And
Interesting.
That's a government issue, not
No, that's certainly
necessarily a mortgage issue.
That makes sense. So if someone wants to look into this as a possible solution for paying for their care, what are the steps that they need to follow with you?
Absolutely. They can reach out to me, and we'll put my number in email below. I would love to talk to them, just educate them on ultimately how this works. It takes about 30 days to get this type of program done, product done. And again, ultimately, there's two types of clients: needs-based and wants-based.
Okay.
And what we're finding, there's a lot more seniors that are looking into this that are wants-based, that don't necessarily need it now,
Okay.
but they're planning ahead.
That's
planning
smart.
for the future.
Sure.
With inflation and where the economy is headed as of late, a lot of seniors just want to make sure no matter what life throws at them, they're going to have the finances to be able to take care of it and afford in-home care
Right.
or anything along those lines.
Well, that would be smart planning, and we want to. The purpose of these meetings is to really help share information that can be valuable to those families that are planning for their future. So, Garrett, really appreciate you coming in today. It's great to see
Thanks
you
for
again,
having
as
me.
always.
I really appreciate it. It's
Please
great
come
to see you
back
as always.
anytime.
Absolutely.
All right. Thank you, everybody. Here with Garratt Hicks of V.I.P Mortgage. This is Java with Jay. We'll look forward to seeing you next time.